Hello, it's Big Chads. This is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about broadening wedges, and we're going to talk about the descending broadening wedge. You can pause and read this on your own. And the ascending broadening wedge. Pause and read this on your own. So we're going to look at these two patterns together. I'll do separate videos on these, of course. But a descending broadening wedge, now you can think of it as a megaphone. Same here with the ascending. These are both reversal patterns. So the descending wedge, you have a move down. And ideally with any pattern, this is a rule of thumb, the more mature the trend is before the reversal pattern, the better. It gives you more confidence. Now, if you think about, say like a diamond bottom, or a diamond top, we've done a lot of work, we've done a video on this, right? So you have an advance, and then you have this volatility expansion, right? And then volatility contraction, giving you the diamond. And it's the idea that you have this volatility expansion after a move up. It's starting to symbolize a potential changing of the trend. And the same is true here with the descending wedge. Right, you have a move down, it gets tight, and it starts to get wider range. You have this expanding volatility, often seen at trend turning points. Now, for the wedge, you want to have 5 touches total, at least 5 touches of both trend lines, not 5 each, but 5 total to form it. Now, theoretically, and again, ideally, you'd see the most volume really kind of in these last 2 lows here, which would make the most sense. You kind of get an expansion and then kind of a capitulation, or just a climax, rather, of selling. Now, you can, in theory, take a long on the break of the trend line, which is something that the textbooks talk about. But the way I teach it and trade it myself is I would probably just use this lower high. I'd wait for the 2-level filter. You know about that. I've described it in other videos, but it's really a trend line break, but then a horizontal level. So what I would do, and if I'm going to play this, what I would look for would be a break of this last lower high, and then I would use that. I wouldn't go in this trend line break because you can ride it, all the way down. The same is true in the ascending bearish reversal. You have a move up and you have this expanding volatility. Again, the name for it, people think of it, the common name for it would be a megaphone, right? An expanding volatility. These trend lines, rather than converging and forming like a wedge of some kind, they're expanding away from each other. 1, 2, 3, 4, 5, at least this one has more. Now, again, in theory, you can take, a short on the break of the trend line. What I recommend doing is waiting for this higher low to be lost. It's much easier to manage your risk based on some clear horizontal level, okay? So these are both the descending and the broadening wedge. These are reversal patterns, okay? And this is for the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Folks, thank you very much, and I'll talk to you soon. Big Chads out.